Hello, everyone. Welcome to CPI Live. I'm Shane Vernier, head trading coach over at howtotrade.com, and welcome to being part of our Switch Markets community. Today, we're going to cover the CPI numbers, which are the latest inflation numbers. We're going to really take a deep dive into what this could mean for the U.S. economy, if in fact we're on the precipice of a recession, or if we're going to get some rate cuts and maybe spur economic growth in a big, big way. So I'm glad to see everybody back in the room. We've got a lot of new faces out there. I always love to say hi to everybody. There's a lot of you here today, though. Amber, good to see you. Geek on Drum, good to see you. Vocals, always a pleasure. Vocals, George Banda. Emoic Resources, you guys got some of the best names ever. And John Smith, I know how to say John Smith. John Smith, welcome. Definitely welcome. What we're going to do here is I want to start off with our pick of the week from the Switch Markets newsletter. Those of you that are clients of Switch Markets, all you have to do is be a client on the mailing list, and you're going to get our weekly newsletter where I break down everything that you need to know for the week ahead. And that's definitely one of those can't miss type of things. But let's get right out to price action. We've got about T-minus 9 minutes before we dive into CPI Live. This is going to be our pick of the week now. This is our silver market. The silver market is one that I've been watching very, very closely. Our key levels tutorial last week, or our webinar that we did. I love key levels. Key levels are absolutely huge, and a lot of folks, Shane, it's the old way of trading. Believe me, know where your key levels are, and it doesn't get any more key than $40 for the top side of gold, or silver. $40, remember, on that Switch Markets thing I talked about yesterday, the gold-silver ratio is shrinking. It's now down beneath 100. That's big. Institutions are watching that, and it's not because gold price is coming down. It's because silver's price is going up. I'm watching silver. In my view, it's one of the hottest commodities in the world right now, and we definitely want to get in on the good foot, make sure that we get a good bid when we can get it. I love scalping short right in front of 40. I think that's great. Here's a good look at the weekly chart here on your MT5 platform. A nice pullback zone right around 38%. That's a fantastic area that I would be targeting, somewhere right around 37, maybe 37.75, something like that. But also, what you've got here is a monthly chart over on our TradingView platform. You can see we've got 40, we've got 45. Now what? Monthly chart, spike low, spike high, pullback zone right around 35. I love that one even more. So for me, if we do see a correction in the silver market, the area between 37.50 and 35 is going to be key for the intermediate term. I would look for that to set up as a swing low, potentially on a daily, maybe in a weekly chart, and give us an opportunity to take a position towards 40. I'm watching this closely, though. Absolutely watching this closely. And also gold. Let's talk about gold here real quick before we move forward. This was a trade idea that we put out yesterday. It wasn't a formal trade idea. I didn't write it up, but we did cover it in the live stream, and boy, that's a pretty good one. Daily chart, okay, we took it right down to a daily time frame, spike low, spike high, pullback right there at 33.40, right above 33.40, beautiful bounce up to 33.53. That right there was an absolute killer trade. That was what I call a banger. We have hit a lot of 38% across the Forex and the metals markets over the last 3 weeks. That tells us the market is trending, or it's getting ready maybe to extend its gains, in this case to the top side. If you're trading above 38%, you got to think the bullish pressure is there in a big, big way. I'm very, very happy with the outcome of that trade. So if you guys got that one, if you missed the live stream yesterday, be sure to check out the week ahead. We give you some good levels for the week ahead. But that right there is one of those things that I really, really liked. So I want to welcome everybody back. A lot of folks. Muhammad, good to see you. Payman. Let me see. Abed. Good to see you, Abed. Mimi. Man, I'm terrible with names. Leo. AXU USD buy or sell. It's a buy. But I wouldn't do anything in front of CPI. Man, good to see you, man. James Haugen, Southeast Asian, Indonesia here. Hello, England. May the Lord and Fed give said. May the Lord Fed give said. Hello, everyone. All right, there you go. Good to see you, Jeanette. Always a pleasure, Jeanette. Thanks for catching us live from down under. I can't remember if it's just really late or really early down there. I don't know. Probably late in the evening, wouldn't it be? Jeffy, always a pleasure. Jeffy Treehawk, good to see you. All right, guys, let's go ahead and dive into what exactly we can be looking for out of today's release. Remember, welcome to the Switch Markets community. If you do need a brokerage, I would definitely be checking out Switch. If you're an international client, if you're a U.S. client here in the United States, contact me on how to trade directly. I'll give you a few ideas. A place to begin trading Forex is Awanda, but I'm more of a futures trader myself. We're going to be talking more about futures. I talked with an old friend yesterday, and he was talking to me about the potential of futures and him and what he's doing, diving into the futures markets. So I'm always excited to talk futures too. So if you have any questions about that, reach out, and I'll be sure to get right back to you. Welcome to Switch Markets community. That's what this is all about. Week 29, it's US CPI and PPI. The next 24 hours will be defined by inflation. No question about it. Tuesday through Thursday, pedal to the metal. I'm going to save you guys the pump-up speech. Pedal to the metal. We go hard. We trade hard. Today, we're looking at that 9 EMA strategy with RSI confirmation right around our economic release, which is in 5 minutes. Jeanette, it's 10:30 p.m. Well, thank you for staying up late. I was up late last night getting ready for the CPI, so I hear you. Sometimes being a trader, you put in long hours. Let me see. Hello from Moldova. Welcome to Mitru. Wow, you guys are from all over. Hello, I'm from Canadian and Belarus. Oh, no kidding. That's absolutely fantastic. Global community, Dillon, Montana, Southwest Montana, little tiny town. We call it a map dot. It's just a map dot. Nothing fancy here. Agricultural community. Really loving the access. Got to go fishing on Sunday, and I really enjoyed that. Getting out in the woods, always fun. All right, CPI, this is what we're looking at. The big one we're going to focus on today is core CPI. Why core CPI? I'm throwing CPI completely out. I'm not even looking at CPI today, and the reason why is right now we're in the peak fuel pricing here in the United States. It's in July. A lot of people are traveling. They got the motorhomes, the campers, all of it. You're burning a tremendous amount of gasoline, and the fuel and the food, those things are included in CPI. I throw that away right now this time of year. I want core CPI. I don't usually look at core CPI, but I'm looking at core CPI today because I want to know the price of that streamlined basket of goods and services. So core CPI is going to be the big one. What is it? Well, let's take a good look right here. This is just a quick tutorial. The core consumer price index measures the changes in the price of goods and services, excluding food and energy. Okay, that's what I want to know. Energy pricing is very, very high right now in the United States because it's peak demand season. We got to look at that core number to get a decent idea of what exactly is going on. So I'm watching that closely, and as soon as the number drops, we'll have it for you right here. It's coming up in about 4 minutes, so that's a little bit outdated. And then we'll look at the raw CPI data as well. It's going to tick higher there, and we're going to have sort of a 45-degree angle on that chart. I'll cover that when the time comes. But the big thing we have to remember here is if, in fact, you're interested in what CPI does, how does CPI impact the Forex? If you got a low number and you miss to the downside, it's bearish for the USD. That means potentially we could cut interest rates because it's not necessarily as pressing to get prices under control. That I don't believe is going to happen today. But a high CPI is bullish for the USD. That's going to be rough on stocks and commodities. Definitely. Let me see, John Smith. I'm guessing if oil goes up, the CAD will be moving. Yeah, the CAD will be moving. Bitcoin, buy or sell crypto, man. Bitcoin we've covered sort of ad nauseum. This is a pullback, clearly a pullback type of a situation here for Bitcoin. If in fact you are a crypto trader, I just put my Fibonacci's right here like this, and you can see 38% rocking and rolling right there at 117. That's not a bad long. It's not a bad long right here, but we could get a deeper sell-off. Personally, I love being patient and getting great trade location. On this Bitcoin, you have a 13-period EMA right down there, and you also have the back end of that daily golden zone. That's a tough level to beat right there between about 114, 1.25, and 113.5. That's tough to beat. That's tough to beat right there. So I really like that one. As far as what the dollar is doing right now, we need to be sort of in tune with what the USD is going to do. This is the big release for the dollar, T-minus 2 minutes. I'm watching this closely on our 920 EMA crossover. You can see our 9s working on crossing over our 20. This is a potential bid. Now, what we've got to do is we've got to get this to close up in positive territory, and this is our coded series. So this will be a gold bar if, in fact, it turns into a buy. But the question is the bottom end for the USD. The dollar's been absolutely destroyed throughout 2025. Since Trump was really sworn in back on January 20, the dollar's just been getting absolutely routed. Is the bottom end? We're going to wait and see. This crossover right here, though, is a big deal. It's a big deal. Okay, let's talk about how we're going to trade right now. I've got a 1-minute chart out here for the gold, the spot gold contract. This is one of those where we're going to look to make some live trades here. These are paper trades. Don't get too carried away with the leverage. We're going to try to keep it halfway realistic for you, maybe if you're trading a big prop account or something. But right this minute, I'm just going to be looking at maybe making a few trades. See what we can do here. 9 EMA crossover. Let's go ahead and just break down the strategy for you. This is a 1-minute chart, and the reason why we're using it 1 minute is because we're going to have heavy volatility, and right down here is the key. This is our RSI indicator. Very important that we get RSI either into overbought territory or oversold territory. if we can sort of negotiate those type of conditions, then we're going to be looking for our buy. In oversold territory, our buy is when price breaks above our 9 EMA. And then if we're way up here, if we're above 70, then we're going to be looking to sell. And that's when we get a bar close beneath this type of territory. Essentially, this trade right here has already hit pay dirt right there. You're deep in oversold territory. You want to buy. That right there would have been your buy signal. You got a pretty good runner to the top side. Everything's going to change right now, though. Okay, bang. Got a big move right there. Initial moves are very problematic, so you've got to be very, very careful with what to expect out of these markets, especially right after a big-time number like this drops. What does this mean to us right now? Okay, gold, break into the bull. That's probably going to be an inflationary type of a motif. Did we, in fact, see maybe a less than CPI? Who knows? Morning to all. I'm watching the dollar yen. Yeah, we're going to watch the dollar yen here in a second. We're going to pull up some Forex pairs as well. But I wanted to get off on the right foot with this gold market. Okay, right up there to 359, 33.60. Interesting, big bullish move. You can see right away we're getting into overbought territory. So theoretically, in the next few minutes, we'll be looking to take a sell, but we can only sell when we get that retracement back underneath that 9 EMA. So I'm watching that relatively closely. Right here, let's go back to our Bitcoin. Did Bitcoin get a bit of a bump? You bet it did. So what happened with our number? 0.2. Bruce Gordon, 0.2. Let me see. Elazar Wealth, what's the US 30? Yeah, we'll look at a little bit of US 30 futures here. Let me go. Joshua Chung, no worries, Joshua. Glad to have you here. Because of my job, I was in St. Lucia, UK, India, and China in the last 3 weeks. That's a lot of travel. So right here, you've got a really nice move. Okay, did we get into a position where we could look to sell? No, we didn't get it yet. We need to get into overbought territory before we can get the trade. So now we're going to go on the prowl. I want to look at the numbers right now, though, real quick and see exactly what the report looks like. Okay, here we go. All right, let's go. USD. Core CPI came in at 2.9%. Wow. That's lighter than forecast year over year. Core CPI came in at 0.2%, beneath 0.3, and just a shade above the previous. That's interesting. That's a dovish print. That suggests that, okay, maybe inflation's under control. Maybe we have an opportunity potentially to get that interest rate cut in September. I'm going to look at those odds before we sign off here today. But what happened to CPI? Now, you can see this is exactly why nobody's watching CPI today. 2.7% CPI shows the growth, where core CPI shows the retracement. What does that mean? It means the fuel prices are dictating everything here in the United States. It's peak fuel pricing here. You guys have to understand that. Refined fuels, gasoline, diesel, these are a big deal, even jet fuel at this point. So when we start talking about energy, all right, energy prices, when they're high, what does that mean to CPI, regular CPI? It's going to artificially inflate the number. That's why you have to understand which time of year you're dealing with. Summertime, you need to be looking at CPI. Summertime in the northern hemisphere. Now, I know a lot of you are in the southern hemisphere, and it would be wintertime. Unfortunately, have I been in the southern hemisphere? I think Costa Rica is about as far south as I've ever been. Interesting. I'm going to have to get down there, maybe see some of that country. Sure does look beautiful. All right, let's take one last look at our naked CPI, and I'm going to go ahead and just cover this, and I already know really what happened. But consumer price index in the U.S. increased to 322.56 in June from 321 points in May. Core CPI, or consumer price index in the United States, averaged 126.73, reaching an all-time high of 322.56. I mean, it is what it is, guys. You're at all-time highs with your CPI. Take a look at that. This is a 45-degree trajectory. This means that we have done absolutely nothing to stymie inflation. I'm sorry, but that's just the reality of it. A lot of people are going to say that inflation's under control today. It is not. It is entrenched. Understand what that means. It means that high prices are here to stay. We have to either make more money, or we have to figure out exactly how to manage the money that we have in a more prudent fashion. I'm sorry to be the bearer of bad news, but that's exactly what's happening to. Let me see, Jeanette. Yeah, come to Australia. I've always wanted to go to Australia. I've just never really had an opportunity. I'm on the fence right now. I have an opportunity to go to Greece, but the travel is going to be pretty tough. I don't know that I'm going to make that trip. I don't know that I'm going to make that one, but I'm thinking about it. I definitely am. Universal, good to see you, Universal. Let me see. Olo, wow, what do you trade? I trade everything. But my focus is crude oil and gold. So right here, we've just got sort of a nothing burger going on in the gold market. We've got to find something to trade right now. Let's get out. Let's try some futures. This is your YM contract. Okay, I like this. I like this already. 1 minute chart. This is going to be incredibly aggressive, what we're going to do right here. We've got a nice big bullish bump really since that number came out. Nice big run up there. Why would stocks be going up? Why would risk assets be going up right now? Because that was a dovish print. That suggests that maybe we're going to get rate cuts in September. And if we get rate cuts in September, then we're going to have an opportunity to see risk assets higher. There's no question about it. Listen, Jay Powell and the Fed made a bad mistake cutting a half point last September. They did. They made a bad mistake. Inflation was entrenched. They should have held rates higher and maybe designed those first rate cuts for earlier this year. They didn't do that. They decided they were going to cut last fall before the election. And what happened? Inflation has been persistent throughout this year. Some of that has to do with tariffs. This is all about COVID-19. This is about flooding the market with so much money that we don't really know what to do. There's still slack in the system, guys. That's why home prices in the United States are way too high for what you get. And, it's tough going to the supermarket. It is. So we've either got to make more money or manage the money we have. Oof, tough proposition, right? Nah, that's the way of things. Just got to find a way to make more. In any case, right here, YM, this is your E-mini Dow Jones Industrial Average Futures. This is pretty close to what you're dealing with the US 30. What do we have? We have a potential trade setting up for us here. We've got right here, we were in overbought territory right on that spike. That tells us that we're getting ready to sell. I want to sell it right now. So we've got a 1-minute chart. What do I need to sell? I'm going to need this to pull off right down here. I'm going to need to get a close. I need to get a bar close beneath that 9 EMA, and then we're going to send them short. It's not a hard strategy. It's relatively simple. The biggest key that you're going to have to be successful trading a 9 EMA is, number one, don't ignore your confirmation, especially on a 1-minute time frame, something like that. You're going to need confirmation. And secondly, you're also going to need to have the discipline to ride these things out and trade during active times in the market. If you try to trade a flat 9 EMA during a flat time in the market, you are going to lose. This is not flat. We're moving. We have volatility. We have volumes coming in. We have an opportunity to do a little bit of work. The question is, are we going to get our trade? Okay, here it comes. Here it comes. What I'm looking for right now is a bar close beneath my 9 EMA. Now listen, if it closes right on the 9 EMA, I'm not taking it. It has to be obvious. Are we fighting a trend right now? Not really. Not really. This is a flat. We got a little bit of a break, sort of a flattening out a little bit. Do we have an opportunity maybe to lock in towards the top of the range? Yeah, there's very real opportunity there. Maybe that CPI high is your high for the day. We don't really know. I have no problem taking the short right now. Right now, the Dow, E-mini Dow is just off about 13 points. It's darn near scratch. If we do get our opportunity to trade, there's absolutely nothing wrong with taking that trade in my view. I have no problem at all. And what would it be? It would be a sell market. We'd go ahead and send probably 4 units short. That's about $20 a tick. And then I'll line the trade up as it comes our way. I'll show you our stop loss is relatively easy. It's going to be right above that swing high up about right around 44,718, which is going to put us down for probably about 40 pips. I'm going to be looking for 40 ticks, which is going to be right down in here somewhere. So I like the trade. I'm excited about it. We just have to get in. And in order for us to get into this market, this bar has to close beneath the 9 EMA or we don't trade it. This is one of our more popular strategies that we've done here over at How to Trade on our YouTube channel. A lot of views compared to typically what we usually get. So this strategy, we've had good success trading it live. We just got to wait. Okay, I'm starting to see the headlines come out. U.S. consumer prices rise by a hotter than expected 2.7 in June. That headline is a fugazi. It's not necessarily a lie because it is the truth, but I just told you why CPI is higher. Core CPI is the story today. If you see media outlets that aren't reporting core CPI, then they are biased. They're trying to paint a picture for you. Don't fall into that trap. Understand what's happening. Okay, here we go. Sell. We're looking at a sell market. I love it. Here we go. It's coming our way. Stop loss. Couple of options with our stop loss. I'm going to play this very basic. I'm going to be right up there. Probably right up there is going to be my stop. However, if you wanted to be more aggressive, you could probably put a stop loss right there and be okay. For me, I'm going to let this thing bleed a little bit because I want to see if we can get a move to the downside. So are we in fact going to get our entry point right here? It's close. Are we going to get it? Yep, there it is. Bang. Okay, we just sold. Why did we just sell? Because this price closed beneath the 9 EMA. Right here, overbought territory. That's going to lock in as our stop loss, and now we're looking for some left to the downside. Where's my profit target going to be? I'm a 1-to-1 trader. I want at least a 1-to-1 risk versus reward. So somewhere down in here, the bottom of this market structure, if you're a smart money trader, that area right there is a pretty darn good one. So if I put it down, say at 44.6, and I'm short from 44.658, what does that give me an opportunity to succeed? Well, I'm in for about 61 ticks, so I've got to be probably right down here. Somewhere right down in here, I would say, is going to be our profit target. That gives us a decent chance to be profitable. Just right off the top of my head, if we're filled at 44,658 and we've got a stop loss up at 44,719, that's going to be what, about 51. Okay, 61 ticks. So 61 ticks down from 658 is going to put me somewhere. 61 is going to be 58. It's going to be 97. And I'm not the best guy at math. I'm not. I don't program computers real well, and I'm not a mathematician. But what we've done here effectively is we've taken a short side of this Dow 30, this E-mini Dow market, and we're looking for a little bit of love to the downside. We're starting to get it. I really like it. I love the market dynamic. We're not trending. Could we get rotation back down to this? It's looking pretty good. There's a long ways to go in this trade, guys. There's a long ways to go. Your success trading moving averages, for the last time, I've said it a million times, your success trading moving averages is going to depend on your ability to set robust stop losses, be patient for these setups to come your way, and then stick in there to get paid off. It looks good right now. Things can change in a minute, in a New York minute. Everything can change. All right, guys, we got to look at some other markets here, though. We did have some requests. Bitcoin's interesting to me right here. We saw sort of the rotation back down if you wanted to pull a 1-minute chart and go back and see exactly what happened with respect to our Fibonacci's. There was our break on CPI, and now we're coming back down. So for me, I take a look at something like this and say, okay, our initial reaction was bullish out of these risk assets, but now reality's settling in, and they say, well, are we going to get a rate cut or aren't we? That's going to be a real challenge for us. So we did have a request there for the dollar yen. The dollar yen was one that we talked a little bit about yesterday. This is fascinating. This is a nice big run up here. Actually a bullish reaction out of the U.S. dollar following what I would call a light CPI number. Spike low, spike high. You could definitely be looking to trade Fibonacci's on this real short time frame. You probably could buy 148s and get away with it, believe it or not. A nice area of natural support right there. That's probably not a bad bid. At least for a Forex pair. So I definitely be watching that one closely. But it looks to me like we're moving higher, which is great. So if we're moving higher, let's go ahead and step back to our macro levels and see what we have. I broke this level down, or I broke this market down a lot yesterday. We talked a lot of yen. Okay, so where are we? We broke above last month's high, which is at 148.32, and right now we're at 148.150. So, yeah, we broke just above it by about 18 pips. Now we've got an opportunity potentially, or just barely above it, I guess, 1.8 pips, fractional pip through me, something like this. Now we're fighting with that moving average. That moving average is up there about 148.11. My moving averages are no joke. 13-month moving average. If we break above that zone, we're not just going a little bit higher, we're going a lot of bit higher. And if in fact that's the case, then you can start looking for maybe a big-time breakout right up in here. So the question right now that I'm going to get from everybody, okay, is it a buy or is it a sell? I can justify selling it because my moving average is there. I don't want to, though. I don't want to sell right now in the face of that CPI number. I see too much volume in the market. I think we could definitely get hurt there. So something like this, we're seeing a breakout right here, 151.66. Back into my monthly golden zone. That would be a level I watch the rest of the week. That right up there would be a pretty darn good selling opportunity. Now, if you want to just step up and go weekly, you can see right here on the weekly, we're looking like we're breaking above, last month's high. I mean, you want to be bullish on that chart. Let's go down to a daily. I would wait for a pullback personally, but you can see we've broken above 38%. And now the real question is are we going to break above that moving average, which is absolutely huge. I mean, for me, it would be a no play. We just have to show the discipline and not play it. I know that's hard because you want to get long and you want to get in there and get the job done, but that's a challenge right now. That's a challenge for me to trade it. I would be waiting for a break above that zone. If we do break above that moving average, then I would scale into the long and wouldn't even think twice about it. Let me see. Gold, Jasper, gold. Yeah, we were looking at gold a little bit earlier. I'm going to get back to it. Calvin, good to see you. Calvin, welcome. Another new all-time high on the Nas. Hi, Shane. Everything's good. Calvin, doing very, very well. I'm confident things are doing well in your neck of the woods, too. I think that, the stocks are just rocking and rolling higher. For me, though, I just don't see much of a trend here, at least not in the US 30. That short, though, let's see exactly where we are on that short. I mean, it looks pretty good right now, short side of this market, but I'm not necessarily sold that we're going to get that huge move that I'm expecting. Well, that this 9 EMA strategy sort of projecting here. I think that's going to be very tough. We're going to look at gold here in just a second. Let's get back to gold, spot gold, and see what's happened on this 9 EMA. Okay, right here, you can see that we had a near trade, so we didn't really miss anything. You can see this area right here. What's the low right there in your RSI? It's 30.37. If you get beneath that 30 level, then you have an opportunity to bid gold and have a chance to grab the runner to the top side. We didn't quite get into oversold territory, so we didn't quite get our buy. It's about all there is to it, guys. So if we didn't get the buy, what does that mean for us? It means that we're on the sidelines still waiting for this price to get out of whack, at least on a 1-minute chart. Now, sometimes what I like to do, almost every time actually, is to step back and use my head a little bit. 5-minute chart. Is that a superior time frame to a 1-minute? Absolutely. Is it a better way to trade the 9 EMA? It's going to give you a better chance of success. Well, you're going to get more winning trades on the longer time frames. I guarantee you that. It's just going to be you're going to have a little bit bigger risk. So if you're in a position right now, looking at a 5-minute chart, you say, okay, I've got 3 price bars in since our CPI number dropped. What could you be looking to do here? Oversold territory. You'll notice right there you were in oversold territory. Did you get a buy? About 6:20 a.m. That qualified as a buy signal, but you've got to use your head, guys. You've got to use your head. You can't take that at 6:20, or it's my time, 6:20, 8:20 Eastern, when you've got the number of all numbers getting ready to drop at 6:30. That's a textbook example of how you're going to lose more often than you're going to win. Now, if you took the buy right here, you see you got the crazy price action, and you were in position to get the big run up. It's extremely risky. It's extremely risky. I feel much better about taking a trade right now and making it look something more like this if I was on gold. Stop loss would be beneath this 5-minute. Okay? Boom, right there. Where are we? Oversold territory. You're down there right around 25.85. So right here, you'd love to get a bullish close above that key level. Now, it's not a key level. It's a moving average. If you could get a bullish close above that 9 EMA, then we could lock in maybe buy 33.50s, 33.53s, stop ourselves out at 33.46, and look to grab that $7 move to the top side. I have no problem with that at all. And with a light CPI number, I really like that play. So I still would rather be long gold. Now it's just about us waiting and getting our entry point. That's absolutely the key. That's absolutely the key. So for me, I'll be watching this one very closely. I love that 5-minute time frame on this in this type of market environment. I think it's pretty good. I wouldn't mind doing that. Let me see. Dragon, thanks. Love the Golden Zone fib trade. I'm a big fan of the Fibonacci Golden Zone strategy. That's one of my favorites. But I'm a Fibonacci trader, so maybe I'm a little biased. That's for sure. So I'm way behind on the live chat. Let's see. Universal Shane, we'll be glad to see your trading setup hardware. It looks like you have multiple screens and you're fully loaded, well prepared. I got two Universal. I got two 32-inch monitors here. They're pretty good sized. Or are they 36s? I can't remember. I know I have to turn the brightness way down or I'm going to need to wear sunscreen. I'll get a suntan. But we've got all that going here. Could I have more? Yeah. I thought about running 4 screens so I could have everything right in front of me. But I do love to be able to look across the entire market. And I don't like to miss much. Typically, I run a bunch of different charts at once, but lately I've really just toned it down to just holding maybe 1 or 2 on my screens, but I'm always looking at my tote board. News feed, tote board, I'm looking at prices, I'm looking at key levels, I'm looking at news feed all the time. And we try to stay sort of on the cutting edge of what's happening. But, sometimes you miss things. Okay, this in fact will be a buy. This is a sort of a buy signal here, potentially setting up in gold. I don't have a problem with it at all. Remember, these are demo dollars. You have to use whatever leverage you can use safely. I always recommend 1 to 3% of your account. And I always say, I'll look the other way. If you have to take a 5% trade, just understand if you get above 5% and start doing 7s and 9s, you're really playing with fire. You don't miss. If you're going 7 to 9%, 10%, 11%, don't miss. Don't miss. Let me see. Pump or dump. Yeah, I don't know, Melvin. It looks to me like it's rotation. We're going to look at our interest rate expectations here in a few minutes, and we're going to go ahead and sign off. But for right this minute, This looks like complete rotation to me. I don't see anything that leads me to believe you're going to get a great, big, huge move in either direction on the U.S. Open. This is rotation. Crazy candle there. And then we come down now. We're coming up a little bit. This is going to be our buy signal. Do I like it? What do I think about it? I think that technically it's a pretty good trade. I don't have any problem with it technically. None at all. Fundamentally, does it line up with what we're talking about with interest rates? Yeah, it does. We're going to look at our expectations here in a minute. Those should be shaken out. But we're going to go ahead and we're going to buy the market right after this 3, 2, 1. Okay, there's our bullish close above our EMA. And, of course, we didn't get filled. Remember, market orders with gold, with something like spot gold, problematic. You're going to have slippage. You're going to have slippage, and you're also going to have to deal with that spread. That's one of the reasons why I trade gold futures. It's not as big of a hole to overcome. Typically, you don't have spreads. You just pay commissions. But we'll talk about that some other time. But nice big break right here. What do I think about this trade? I know we have a decent stop out. My stop out point's pretty good. We got filled right up there at 33.54, and now we're down there at 33.46, so something like $8. 1-to-1 ratio. That should set us up right around what, 64-ish or 54? It should be about 62. Is this doable? Well, you got to take out the top of market structure on that CPI. This, if you're a smart money concept trader, that's a liquidity sweep. There's no two ways about it. We went right up to 33.60. Seller stepped in and buried the market. Are we trending on gold? No, we're not. We're still up about 0.25%. We're rotating around. Now, clearly, we're way off. I mean, we're way off from where we were about 2 hours ago. I mean, that's sort of a downtrend-looking thing, isn't it? Yeah. Could we be in here to pick a bottom, though? Maybe. What's the most important part of our trade? Structure. We have three elements of every trade. You've got to have a profit target, you've got to have a stop loss, and you have to have an entry point. The 9 EMA gave us an entry point. The RSI told us the price was out of whack. We have a stop loss beneath that swing low. Is it an obvious one? Yeah, of course it is. Everybody in the world can see that swing low. Everybody in the world can see it. What we've got to do is make sure that we don't do something stupid like put our stop loss right on that swing low. Put it down there a little bit. Give yourself a little bit of room to move there just in case you do see a penetration of that zone and then a retracement. For me personally, if I was making this trade in the live market and I knew I was going to be in front of the computer the whole time, I wouldn't even have my stop loss down. Now, listen, I can't recommend that you guys trade like that. I can't do that. I will tell you that after a decade plus in front of the screens, you have a pretty good idea of what the market's going to do. Sometimes I get surprised and we see a big rush, a big break or a rush against us. But still, I know that when price comes down here, I'm going to have to get out. But what I like to do sometimes is when we trade down there is give it a minute. Maybe give it a minute and a half. Wait and see. Now, if the price just breaks against me and sweeps, then I'm out. I get out. I say, okay, whatever, I'm out. But if price comes down here and maybe you start to see a little bit of stagnation at that swing low and then it starts to rotate back up, we can avoid our stops being hunted by just being smart and being diligent about managing the trade. That's an advanced concept. That's hard to do. That takes a lot of experience. But realistically, what I like to do on these live streams is just go, yeah, there's your stop out point. And if it hits it, just get out because, well, I'm not going to be sitting here all day with you to manage this trade in real time. And right now you can see we're dealing with the spread. Still haven't overcome that. Still like it, though. We're in bullish territory. We're waiting for the big run up. If we make a run and take out the top of that CPI range, we're going to have a great chance to win some money here. So that's not necessarily the worst thing I've ever seen. Pretty darn good setup. Love the 5-minute chart. 5-minute, I prefer that to a 1-minute, that's for sure. But we're going to go ahead and see how that pans out. Let me see. Gold trying to tick down a little bit. Yeah, I mean, not too bad. That was a few minutes ago. I'm way behind on the live chat. Let me see. Yes, sir. I've been bullish on the yen since the week. Started my trade looking right. Fantastic. Joachim, a buy on gold. There it is. Would buy gold at 33.50 maybe. Yeah, I really don't have a problem with it. You're seeing the retracement right here. We made a video using Fibonacci retracements to fine-tune your entry points. 38% right here sort of gets with the program, 33.51. We could definitely be looking to go long there. But for right now, I mean, this trade's getting hit. Might be a loser. If it's a loser, we rip the Band-Aid off, and then we move on to the next one. And remember, these are demo dollars. You always have to trade within your means. That type of structure right there, if you had a $50,000 account, you could probably do something like that and be just fine, even if you had a $50,000 prop account. And right now, we're taking major heat. Gold's coming off in a big, big way. It looks like this downtrend is going to win. Let's just wait and see what happens. A lot of action in there, though. I do like the volatility and the participation. It's going to give us a chance potentially to grab that rebound. But right now, it's make or break time. If this trade keeps going against us, we're going to get stopped. I know that's obvious, but get used to reading price action. Understand what's happening. We're getting smoked right now. No question about it. There's a reason why they make stop losses, that's for sure. Let me see. Universal. What about GAN, the GAN box indicator? I use it often for premium discount around supply, demand, and XAU. You know, I don't know much about the GAN boxes or GAN, what was it, GAN, not GAN zones, but GAN fans. I don't know much about it. I told a story the other day about a trader that was from back in the day that came up with my uncle, actually. I won't mention any names, but he was a big GAN trader. Couldn't get anybody to trade GAN fans. They didn't like that form of trading, so he ended up actually taking his life and sort of going crazy. But there's a lot to be said for these approaches. I just don't know anything about it, and yeah, that's about it. That's about all I can say. I mean, you guys know the rules of these streams. If I don't know, I'll tell you I don't know. Right now, I don't know what's going on with gold. It looks like we're going to lose, though, and that I don't like losing. Losing spoils my day, that's for sure. And then the YM, our E-mini Dow trade's still doing okay. We're not necessarily getting that big washout that I was looking for, though. We'll probably get that maybe on the U.S. Open in about 35 minutes. This gold trade's not over yet, but I don't like it. It's really starting to get choppy and move sideways. So we're probably waiting for a big rush of participation right around the U.S. Open. It may pay us off, it may not. But remember, we've got that stop loss, and that's the most important part of what we're really trying to do, is taking a position, getting in on volatility, and then understanding where we have to get out. That's key. All right, guys, let's take a look at the DXY real fast, see where we're at here. Nice pullback. We may not get that crossover today. You're going to need probably a big bullish close one of these days to get that 9 to cross over the 20 and give us an opportunity to take that long, or at least start to believe that the bottom for the USD is in. I think that's fascinating. Let's take a look at our pick to click, our silver trade. We didn't really get anywhere near where we needed to be on the monthly. Let's go back and check out our weekly. This is coming into play, though. I would be watching this relatively closely for the next 24 to 48 hours. 37.65-ish, so maybe 37.75. That could be a really great play in silver. I have absolutely no problem with that. Love silver to the top side. It's a tough market to trade, guys. Silver has been tricky to a lot of people. Still love the opportunity to test 40, though, and really looking for any chance to get long. It's not a bad one. It just isn't a bad one. So I'm watching that closely as well. All right, everybody, let's just go do a quick around the horn here on a few of our Forex majors, and then I'll go ahead and sign off. This is a level that we've had out for quite some time. Monthly pullback, 31.50 in the Great Britain Pound USD. Love it. Absolutely love that trade. This trend is still very much intact, so I'm not really worried about not even considering taking a short here on the cable. You'll notice the weekly technicals don't look real good to me. I don't particularly like them. This moving average, though, 134.18, looks to me like it was a pretty darn good trade. What's the weekly low? The weekly low right there is 134.21. So that 13-week EMA looks like it stood tall. Key level, be ready. If price breaks beneath that zone, then we may go down and check out our key support zone right down there, 131.50. I would say 131.50 to 131.75. Probably could be a pretty good bid there for the Great Britain Pound USD. Let's go to the Euro USD. Real similar price action here. There really is no secrets in what we're trying to do. We're trying to get in on these trends. If in fact we believe that the dollar, is going to stay weak, and today's CPI sort of suggests that it may. You can see right now the DXY is falling off about 0.10%. This was a monster level for us. Nice big daily range, spike low, spike high, right there, 38%, 116.84-ish. 117, that was money once, twice, 3 times, even 4 times. You got a real nice choppy trade, a little bit tougher. Now we're trading beneath that 38%, but price is starting to rally. Why would it rally? CPI. So I would definitely be considering bidding the top side of this level. Maybe if we get a daily close above 117, then we can start talking about taking a position here in the Euro USD and maybe riding the lightning north. All right, guys. This gold trade looks like it's in dire straits. Keep an eye on that stop out right around 33.46. As far as our E-mini Dow, right about at scratch. This doesn't surprise me at all. I really wanted to get a real nice dump right here. This is a 1-minute trade though, so that's why the price action's a little bit tricky. But you can see exactly what happens We're just getting into Chop City. What's the big event coming our way? The Wall Street, the U.S. Open. Be careful here if you're holding positions. This market can go really anywhere. This is really what we wanted. We wanted this to come down and get a little bit more bearish price action. But the market is a bit heavy, but it's rotational. You won't get more than likely you won't get a move until the U.S. Open 30 minutes, maybe 25 minutes from now. All right, let's check one more thing, and then we're going to go ahead and sign off. I really do appreciate everybody joining us this morning. Early morning for me, these economic events typically are about a 4 o'clock wake up call. Late to Son Goku, late to the stream. What did I miss? You missed everything. You missed CPI, right? Nah, you didn't miss much. Just catch it on demand. We're working this US 30 trade short, and we're also watching our gold trade get swept out of the box. That thing's going to get stopped, and that's annoying. That really is annoying. We're right around 33.50 right now. I don't like it. Okay, here's our interest rate expectations. The next FOMC meeting's in 15 days, 4 hours and 59 minutes. I'll have all the action live for you here with our FOMC live series. Probabilities for the July meeting, the July 30th meeting. What do you got? We've got about a 97% chance that interest rates are going to be held firm. Did that change today? No. September, this is what everybody's looking at right now. This is what we want to know. 60%, about a 60-40 chance that we get our first rate cut of 2025 in September. Is that a foregone conclusion? I don't think so. I really don't think so. I'm not sure that the Fed's going to do much of anything. Not sure at all, actually. We're going to wait. We're going to have to wait and see, though. But this is what we're all watching. We don't expect anything to happen in July, but we do expect it in September. And if you don't get these rate cuts in September, that ain't exactly a good thing. How about October? Okay, we're pricing in a really severe chance. Not a severe chance, but 83% chance we get at least a quarter-point rate cut. And where do we think interest rates are going to be by the end of the year? We believe they're going to be down big, at least one, probably two cuts. And that's no surprise to anybody. That's exactly what we've seen come out of the Fed, the FOMC members speaking. Why are interest rates so important? They're hugely important because lighter interest rates are going to lead to economic growth and development. You'll see an uptick in U.S. equities and risk assets, things like crypto. Typically will go up. Also, inflation will come back into question, and it's already questionable. So this bell curve right here is a good illustration of what we expect to happen. 2 rate cuts by the end of the year. If you don't get those rate cuts, you're probably in for a correction. And that can definitely be problematic and difficult. Okay, guys, as soon as I clicked away from the charts, we got to move. Interesting stuff right here. US 30 is getting heavy. Let's go ahead and take a look at our gold, though. Take a look at what happened to gold. Gold's going absolutely crazy down here. We are in, big trouble. Essentially, we're in big trouble. 1 minute chart. This was our trade, our 5 minute trade right here. We might have got away with it. Right there's your stop loss. You're still very much in negative territory. Just got a serious break. This high, though, was right up to about 33.51, somewhere in there. And then we just came right off down there to the 48 level, 47 level. This looks to me like we're going to get triggered and going to go ahead and get stopped out. So that doesn't surprise me necessarily. We just got into something that isn't exactly as good as we thought it was. We're not out of the trade yet. We've still got $3 to play with, but the cavalry needs to come, and it needs to come quickly, or else we're going to get ground out of this. Back up to 33.50. We need to see bidders step in over 33.50 and send this thing up to 55, and it needs to happen in the next few minutes, or else we're going to get nailed. Call it intuition. All right, guys, I'm going to go ahead and sign off right now. Let me see. Are we bottoming out on gold now? We're still alive. We're still alive in the RSI EMA trade, but I don't particularly love it. It's not looking great. Not looking great. We're back up to 33.50, 33.49. I see us getting triggered down there. I would give it a minute. I mean, this looks like it stops, could definitely get run and then get a bounce back in a big way. You just gotta go ahead and be patient. Absolutely, Jeanette, you're 100% welcome. Have a fantastic trading session when you get after it tomorrow during the Asia Pacific. All right, guys, I'm gonna go ahead and sign off. We ran a little bit long, but a lot happened today. We'll look at the headlines later today. I'll have a trade idea out for you a bit, probably in the next few hours. But the biggest thing that we have to remember is we stick to our stop losses. We don't try to force things. Let the market come to you. Wall Street open in 26 minutes. You're going to see a flood of participation and more volatility. No question about it. Right now, the gold trades on live support, 33.50. The E-mini trade's looking pretty good at 44.644. I mean, we may actually get paid off there. That doesn't look too bad. But right now, gold's making a comeback, 33.51. We need to see it close back above that 9 EMA, and then potentially we could grab that runner up to 33.62. It's just sometimes, guys, you just got to weather the storm, and it's hard. I hate trading when we're negative, but that's sort of the way that it is. Cheers for the stream. Absolutely, Sengoku. You have a fantastic trading day. My pleasure, Jeffy. Always good to see everybody back. A lot of familiar faces, a lot of new faces. All right, guys, I'm going to go ahead and sign off for right this minute. Interesting trading day coming our way. If you just made a ton of money, if you just made a bunch of money, don't give it back on the Wall Street Open. Remember, 25 minutes, you're going to see a big flood of participation. It's going to hit everything. It's going to hit gold. It's going to hit the U.S. indices. It's going to hit the U.S. dollar. Be ready. Look at gold, 33.52. Don't call it a comeback. We've been here for years. Let me see, Philip, looking CPI chart for July 2023 and July 2025, wondering WFT is up with Fed interest rates. Interest rates are too low, in my opinion. If they were serious about restoring pricing stability and building an economic future, interest rates would be high. And what would happen is the debt load, right now the debt load that the world's carrying, but also the Americans are carrying, me being one of them. Of course, I don't have any debt, so I'm not one of them. I went through this back in 2012. It was ugly. I'll never do that again. People are carrying an incredible amount of debt. And in order for your economic system and your monetary system to do anything of meaning and be built on solid ground, not sand, you have to cut the dead weight. The people that are underwater need to be not eliminated, but they should be forced to restructure. And as long as you keep cutting interest rates and extending credit, you're kicking the ball down the road. The United States doesn't want to deal with it. The world monetary system doesn't want to deal with the debt. They want to just kick it down the road with derivatives, and they just want to keep issuing more and more money. And it's destroyed a lot of people that have been savers their whole lives. So what's happening right now, I don't like. Interest rates need to go up. I would put them up at 12% for the next year. Restore pricing stability. Get prices down. They're not going to do it. They're going to cut interest rates. And once they start cutting, you're going to see the next leg of inflation, and the United States dollar is going to start looking a lot like the Japanese yen. That's what I see here. I see Abenomics in complete control of the United States economy right now. The focus is on foreign direct investment. The focus is on devaluing the dollar. The focus is making sure that there's plenty of liquidity in the system instead of building a system that is actually built on solid ground. I could talk about that stuff for hours, and I got a pretty good feeling I'm right about it. It's just the way it is, guys. All right, I'm out. Gold coming back down to 33.50. It's anybody's guess which way that breaks. I don't like it at all. We didn't get in on the momentum that we needed to. All right, guys. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.